The Indian stock market has been through a rough patch since October, with FIIs continuing to sell aggressively. But is the worst over, or is there a shift happening under the surface? Let's break it down and see where the smart money is moving. Before we dive in, make sure to subscribe and join our Telegram group for real time market insights and discussions on finance and investing. Foreign investors have been pulling out money at a record pace, bringing their ownership in Indian equities down to a 12-year low of just 16% in January. The biggest casualties of this selling spree were financial stocks, which saw massive outflows of 12,700 crores, followed by consumer services and IT stocks, which lost 4,800 and 4,500 crores respectively. Even auto and capital goods stocks were not spared as FIS continued to unwind their positions across multiple sectors. This heavy selling created uncertainty and volatility, but the Indian market is now showing signs of stabilization. Beneath the surface, there is another story playing out. While FIs were selling aggressively in some sectors, they were selectively buying in others. The biggest inflows came into telecoms, textiles, chemicals, and diversified stocks, sectors that could benefit from policy tailwinds, capital expenditure cycles, or structural growth trends. The buying volumes in these sectors were smaller compared to the sell offs, but they hint at where foreign investors see value amidst the turbulence. At the same time, domestic investors are stepping in to absorb the selling pressure. Mutual fund ownership of Indian equities hit an all-time high of 10.3% in January, showing that Indian investors still have faith in the long-term growth of the market. This shift suggests that while foreign investors are reducing exposure, local institutions and retail investors remain confident, creating an interesting dynamic between domestic and global flows. So, what does this mean for investors? Volatility is likely to continue as FIIs rebalance their portfolios, but this does not mean a broad market collapse. Instead, it looks like a phase of sector rotation with some segments seeing renewed interest. While financials and IT may take time to recover, the inflows into telecom, chemicals, and textiles could indicate early opportunities. For long-term investors, the takeaway is clear. Understand where the smart money is going, stay focused on fundamentals, and avoid making decisions based purely on short-term panic. Markets are always shifting, and tracking sectoral flows can help us see where the opportunities lie. Are you investing in any of these sectors? Let me know in the comments. And if you haven't already joined our Telegram group for deeper discussions and real-time updates, please do so.